Yep, starts.
Good afternoon, ladies and gentlemen. My name is Prakriti Paudil and my student ID is EMV21843. We are the member from Group S1 Tuesday classes. On behalf of our group, I would like to thank our course coordinator and lecturer to provide us an opportunity to video present our assignment based on implication of international accounting in Australia after IFRS period. Today, I will be making an executive summary and introduction of the topic. For that, we have chosen peer-reviewed journal article we picked from Australian Journal of Management as of 17 February 2011, and the journal article is named as Changes in Value Relevance of Accounting Information of an IFRS Period Evidence from Australia. It is basically based on the financial industry. So let me start with the executive summary. The IFRS, termed as the International Finance Reporting Standards, upon its development was focused on achieving a common ground for accounting to make it easy for investors to invest across boundary. These standards were adopted in Australia after the 31st December 2005. There were accounting changes that occurred due to its changes for the companies in Australia, which were listed in the Australian Security Exchange. One of the major changes that was recorded was with regards to the value of relevance of both the earning and the book account of the equity. The earning had its value of relevance increased to firms that had adopted it. However, as per the case of the value of relevance for the book account of the stakeholders' equity, there was no any significant changes. So going on to the introduction, the IFRS were developed by the International Accounting Standard Body, that is IASB, upon its formulation in the year 2001 to harmonize the standards that were used in accounting across the border of different companies. They were tailored upon ensuring that companies' accounts were easily comparable, were easily understandable across international boundaries. This was done because there was a rapid rise of the international shareholding and international trade between countries across the world. These laws were made to replace the national accounting standard that existed at that particular time. In Australia and in the European Union, these standards were agreed to be adopted by the companies in their stock exchange in full by 31st December 2005. And before this adaptation, from the period of 2003 to 2005, firms in Australia operated differently as opposed to how they are operated now, and that is after the period of 31st December 2005. So the two periods are this referred to as pre-international accounting period and post-international accounting period. So rest of the discussion will be made by friend Bhavana.
Thank you, Prakriti. Hello everyone, my name is Bhavana Nirola. My student ID is EMV21785, and I'm going to discuss about the value of relevance of both earning and the stakeholders' equity. Two accounting things stand out in the article. The first thing is that both of the earnings and the owner equity for various companies are affected by the adoptions of IFRS. This cuts across all the companies listed in Australia's stock exchange, either small or large. The second thing is that earnings for the company becomes more precedent on the adoptions of IFRS. Therefore, the adoptions of IFRS by all the companies that were listed in the Australian Stock Exchange was something that was to be invested with a lot of cares. It has shown that has the various changes. The earnings of the company become more value relevant upon the adoptions of IFRS standards in Australia. On companies presented their information to the stock market or made it available through their annual report. It is clear that, therefore, the adoptions of IFRS requirements in the years of 2003 to 2005, the companies where reports on their financial status, especially earnings, were not very value relevant as would have been wanted to them to be. This was changed by the adoptions of the new international standards. The value of relevance of the earning is mainly affected by the association between accounting information and the market value. Every company prepares accounting information at the end of each financial year. For the country like Australia, the exchanging financial accounting standards before the adoptions of IFRS was a high quality and enforced throughout the country. This was majorly to be protect investors regardless of the countries or the region. This is the mainly viewed in the value of relevance both of the owner's equity and earnings from the company. Thank you. Now the further discussions will be done by my friend Anita.
Thank you, Bhavana. Hi everyone, I'm Anta Adhikari Morrison and my student ID number is EMV21842. Now I'm continuing the topic. The earning of the company has their value relevance slightly affected by the adoption unlike other when the issue of compulsory adoption was not followed. Like the company earning, this is also dependent on the share price and accounting information. The adoption of IFRS in Australia changed the association that exists before between the price of shares and the accounting information. The share prices are mainly influenced by the investors, and having new investors in the company's economy means that the shares price are likely to go up as a result of increased demand. This leads to the effect of making the earning more persistent. Therefore, the increase in the persistence of the earning is what now contributes to the value relevance of the earning. This shows how the adoption of the IFRS has led to an increase in the volume of irrelevant in the case of earning. However, it should be noted that this change in investment has minimal effect on the value of relevance with which one can associate with the book account of equity for a particular firm. Thank you. Now the further discussion will continue by my friend Vidhi.
Thank you, Anita. My name is Vidhi Patel and my student ID is BF42060. And lastly, I am going to discuss with you guys a conclusion. In conclusion, it is evident that the two periods, the pre-IFRS adoption and the post-IFRS adoption, presented some financial differences in the Australian companies that were listed in the ASX. The main difference is that in viewed in the terms of the value relevance of both the earning that a particular company is presented with the book of account of the stakeholders equity. The value of the relevance of the earning for companies in the Australia increased due to this adoption. This is mainly attributed to the increased persistency of the earnings. As for the book of the account of the equity, it shows no significant change in its value relevance. In the other words, it remained unchanged over the two accounting period, the pre and the post adoption of the IRS. Thus, it is worth nothing that both the adoption of the IFRS in the Australia affected companies to a great extent. Thank you so much. This is end of our presentation. Thank you guys.